Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, today we have the CPI report. And, this one could be a real doozy. So, let me come over here to the charts. You can see here in the treasuries, if I make this a little bit larger, we're already getting a little bit of front running of the CPI report. The street expects that this report is going to be a little bit hot. So some of the cyclical components of inflation are kind of coming up here a little bit. It's not necessarily like a big warning sign of larger inflation to come, but most of the, even though the kind of, what would we say, the consensus expectation is spot 3, but what I am seeing is a lot of analysts predicting higher than that. So I think that the street expects that it's going to be a spot 4 on the core inflation. And if that is the case, that could really, really kill treasuries. And I think that we would probably come out below this sort of, support area from the beginning of February. All right. Here's the S&P 500. We're still just kind of going sideways over there. Oil, after having a pretty good run, takes a little bit of a break. Gold and silver also taking some breaks. Copper faring a little bit better. Japanese yen had a bit of a pullback there. But the dollar not moving that much, actually. So that's kind of interesting. And then we got Bitcoin. Bitcoin actually falling below 97,000. So still in a downward channel over there. So that's what we got. I would say I'm a little bit early, but really I'm on time today. So let's see. Everybody here? No, yeah, it's all working. We're good. So again, coming back over here to the CPI, US CPI month over month headline expectation spot 3, previous month spot 4.
In 5 minutes time now.
US core CPI month over month
data for the month
spot 3 with the previous reading of spot 2.
2.9%
and
2.9%.
Again,
Range of 3.1 to 2.5.
seems like the street is actually expecting spot 4.
Forecast 0.3% on the price.
Uzi says earlier than normal. Yeah, I just it was a CPI report and I was like really pushed hard. Focused
3.1%
and took a shorter shower, ate faster,
range of 3.3
so that I was here on time.
Expected, and core.
If only I could do that every day.
Forecast 0.3% on the prior 0.2%, with a range of 0.4 to 0.2% expected. With this,
again, there you got a little bit of a preview from the new squawk. That's all you're getting, though. That's all you're getting. Okay, now for me, I think that if I was going to take a trade and try and front run this, I think that I would go long. It's kind of an interesting situation because, if it is higher than expected, it could really roil the market. But if it was lower than expected, that would be so unexpected for the market that would really be a huge move. So you probably get a bigger move going short the treasuries. But I think that scenario is very, very unlikely. Very, very unlikely. If the numbers were in line, I think that the treasuries would buy. If the numbers were in line. But I think it's slightly more likely that it comes in at spot 4. So that's probably... Oh, you know what? I was saying like they're front running the treasuries, but that's a buy. This actually doesn't match up with what I'm expecting. I'm just realizing. I'm so dumb. But that doesn't really change my analysis of the number. It's more likely to come in at spot 4. If it comes in line, then it's a buy. So maybe somebody thinks it is going to come in line, and that's why they're buying. But for me, I think I'm going to say that this and non-farms are too big for me to take any kind of a trade ahead of it. But I will keep my my account with 3 contracts, probably only 1 contract for the aftermath, if I feel really strongly about how they react to it. All right. That's my plan here. Just should note, do we have anything else? Powell is going to be testifying again today, this time to the House. Bostic is speaking at noon Eastern time, and there is a 10-year auction. 10-year auction, U.S. federal budget balance. Waller, Japanese PPIs tonight. So actually a decent amount of stuff even after the CPI for the markets to trade off of. But the CPI is really going to be the driver. If that CPI comes in line, like, we could have a really, really great day. We could have a really, really great day if it comes in line. I hope it comes in line, because I think that it's slightly less likely. Oh, you're talking about the last release, how far it went? The last one was pretty big because it was lower than the market was expecting, and that was a big surprise to them, right? But I kind of think that higher inflation that they were expecting last time, you will probably see in this report. In particular from, like, housing and stuff like that. You know what? I hate doing this. I'll have to do it later because I have, like, my cost basis and everything is screwed up. That's okay. I'm getting the eye twitch again today, but it's a different eye, and I don't know what is. Some nutrient I am lacking or something I'm doing that gives me the eye twitch. But, like, the eyelid kind of goes like... I'm not that stressed out. This isn't that stressful. Okay, here we go. Ooh. Okay, big jump, but it comes back. In line? Core is spot 4. Okay, the way that the market reacted to that is actually a little weird. It's actually a little weird. It spiked at first. It spiked up at first, but then really strong down. Oh, wow. It moved down so quickly. I did not realize. So I think what happened there was... Oh, no. It was really bad across the board. Why did that spiked up just to fuck with people is what happened. Because the headline was spot 5 versus spot 3, and then core was spot 4 versus spot 3. So it was higher than anticipated. So now the question is, how far can this go? I'm not entirely sure. Okay, so we got to come back to our volume profile levels now. Right, I said that it would probably push us below this support, and it has. There's still kind of this 108.08 area, and I can see on the DOM there is a huge order there. So that's got to be my next benchmark. If I'm holding this, that's, I think, where I'm expecting it to go. I think I'm gonna play this one on the safer side. I'm concerned that that impulse was so strong that this results in a double distribution day rather than a trend day. At least in the treasuries. In the S&P 500 might be a different issue. How is the S&P 500 doing here? Okay, they're not below the lows of the 9th. That would be 6,015-ish. My, oh my. Okay, well, the treasuries is coming down to that area quite quickly. I guess I should also now come in here and fix my data. Reload all historical data. Because I want to know where market maker position is from. Then my new squawk is saying that the curve is little changed, but it looks really significantly changed to me. It looks like they flattened considerably. Okay, so we're well beyond any of those kind of levels. Yeah, the market maker positioning is irrelevant here. The market maker position was at 20. Way back there. Way back there up at this. Was there. Oh, wow. So if this were to mean revert, it could be like a really steep one. So curiously enough, the net sell, as strong as it was only 20K. Yeah, I think we have more to go. In fact, the fact that it's only 20K has me thinking I could potentially move that target. Okay, so the news squawk is telling me that the short-term bonds are now pricing that the Federal Reserve doesn't do a rate cut until December instead of September is what they were saying before. So they're definitely shifting their expectations. I think, well, you know, again, I would really like to see lower interest rates, but a slightly lower stock market would maybe be a healthy thing too, you know? Is it smart to put 2 stop limit orders both ways? No, it is not. I would not do that. This move is a perfect example of why vital. Because when we started, we were basically at the open at 108.30 half. And when the news hit, look at that volume there. Look at the volume that hit the bid. Or sorry, that hit the offers. So there was a good 6,000 to 7,000 contracts that on that release got triggered long. Even though the number was very clearly a sell. I was saying before this came in, remember I said, I think the chances are it's going to be a spot 4 and that the market's not going to like that. The market's going to sell. And it did. So if you had a limit order in there, your limit buy would have gotten hit first. And then your sell would almost immediately, you know, you would immediately get stopped out of that trade, essentially. It would just be a straight loser. And then, you know, if you have one order cancel the other, then you completely miss the sell. But you could potentially get the sell and, you know, you'd lose a little bit on that and then you'd make a little bit on this. And maybe in this situation that would work, but in other situations it wouldn't. So, you know, trying to like expect the volatility and set orders for it doesn't work. If you really think that the event is going to be volatile relative to people's expectations, then the right thing to do is to buy straddles. You go in the options and buy a put and buy a call. And then you make money on the volatility being higher than the market expects. But you're going to have to pay a lot for those because the market was probably expecting this news to be relatively big piece of news, right?
Block sell.
Whew. Whew. Okay, I'm going to stick to my plan here, but the way that this is moving makes me think there's a very high probability that they just blast through that 08. I mean, they came up to it with some, well, them coming up to it, trading such big orders maybe actually is something that kind of slows it down. So I still think it's the right choice for me to take the trade off, but you know, the cumulative delta change is still only 30K. And on a day like today, I would expect it to be more like a 50-60 throughout the day. So I think we could get plenty more selling. You know, I think in a situation like this, Vital, that the market provides you enough opportunity after the news release to do something. Right? Like it, these moves have very, very significant macro consequences for the market. Big players have to move a lot of money because of what's in that report, and they literally can't do it all at once. And in fact, I would say in a case like this, they can't do it all in one day. So, you know, there's going to be plenty of action. The issue is always going to be here is, like, from this point, you sell it, right? The question is just where can you sell it? Because, man, if this were to whip back on us, I think it could come back as far as 20.5. It's pretty unlikely in this situation, but if they really needed to, like, gasp for error and rebalance everything, oh, actually, it's 18.5 now. 18.5-ish is about where it would mean revert back to, right? That's a massive move up. That's like if I were to take a reversal here and I got to 18.5, that would be an amazing trade, right? Most retail traders scalping the treasuries, that's too big of a move for them to handle. So, you know, like, can I sell it at 09? I kind of think that if I were to sell it at 09, that by the close of business tomorrow, that it will be lower than 09. But what it will do, how much heat you will take in the meantime is kind of the question, right? That's what makes it hard. But just the point being that I really think that we should expect the flows to continue to be short. Okay, so pretty big collision at 08. But the sellers were definitely there. Wow, and in fact, 5,000 now trading at 07.5. That's a little different. Okay, so this one is going to be really, really interesting because there was a lot of liquidity around that 08 area. There was definitely a lot of liquidity around that 08 area. But this is a situation where there is really no limit on how many market order sells you can get. Wow, look at that offer just really stacking. So somebody was just chasing it there. Did you see that? There was a 4K got put on at 07, and when he didn't immediately get filled, he converted into a market order and hit the bid at 06.5. 4,000 contracts. Okay, well, that's one relatively large guy that I think is done. So that might give them a little bit of a reprieve. Yeah, back to 08. So that kind of action right there is pretty good setup for a liquidity hole forming at 08. The market makers are, well, I don't even know if it's the market makers at this point, but the liquidity on the inside bid and offer still looks relatively okay to me. And I'm still seeing iceberging behavior as well, so they're not quite there yet. It is kind of twisting back on itself though, so it is starting to do the sorts of things that kind of create these holes. Okay, interesting. So pulling at 09, so maybe we are in that kind of a condition. So what I think it's going to do now is it's probably going to form a hole, a relatively wide hole like this. And it's going to be extremely sensitive inside of here. Like it's going to be able to skate across this range very easily. '09 is where I got out. I don't know if that is the I wouldn't rule out it pulling back and then pushing down lower later today, right? But if that is the end of that swing, I'd say I played that pretty perfectly, right? Uzi says 10 to 15 ticks more, maybe just based on the volatility from past. Yeah, I don't know though. What is the range been so far? Let me measure it. You're doing that based on the range, right? Let's see here. I need to change it to ticks. Ooh, yeah. See. Okay, now that was a pretty big order, but it's going to be able to move really quickly in this range now. This is a dangerous range. If you're scalping for ticks, this is a dangerous range. 62. 62, and the last one was 70. Well, that's interesting. Because I would expect it to move more than the last CPI, no? I guess last CPI was a bit more of a surprise to the market, because this one I really felt like the street was leaning on that the numbers would be a little hot. Well, we're kind of, since we're in the liquidity hole now, I do think that that's what we're forming here. Let us check Zero Hedge and others to see if we get a good synopsis. If there were any surprises in where hot inflation will shatter market calm. Okay, as we highlighted in our preview, the CPI matters a lot. Again, after last month's CPI report came in cooler than expected, with core CPI missing expectations, and sequentially and year-over-year analysts expect core to accelerate sequentially. But bear in mind, we have the annual revisions malarkey to wade through first, so who knows what the expectation will be comparable to. Seasonality screams big today as Deutsche Bank's Jim Reed points out surprises to CPI over the past 25 years have been more likely to be biased to the upside in the first half than in the second half. January's release is seeing the largest number of beats and the lowest number of downside misses. And sure enough, both headline and core CPI rose more than expected in January. That is the 7th straight month of accelerating month-over-month prints. Core services costs are accelerating rapid, which is kind of funny. So there's this whole thing that like AI is taking over everything, and it seems like companies are already starting to factor in AI into their hiring. Like that seems like that's part of why hiring in tech is so rough right now, because all of the investment is going into AI. But service costs are accelerating. So AI is not resulting in a reduction in service costs, probably because people aren't actually able to use AI effectively yet. I don't think that the AI can really do... The hallucinations is too big of a problem right now. Okay, core CPI, more watch, jump spot 4. Blah, 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 blah. Core goods have shifted away from year-over-year inflation. What will stocks do? It's certainly been a wild ride. Oh, yeah. So Goldman Sachs was saying that if this... in this scenario, that the S&P would lose 2%, between 1 and 2%. Right now, NQ is, well, let's do ES. ES is down 0.87%, so still some room to run on the downside after the open, perhaps. Gus, how are you? I haven't seen you in a few days. Well, actually, it's been... You were here last week, though, weren't you? I think so. Perhaps more notably, the market is now pricing in just one rate cut this year. Yeah, it was Friday. That's right. That's right. Now, that was not... Because I was hoping to get a better look at the internal... I mean, I can pull up the report, but I didn't really get enough of a read this time about what they were expecting on the individual things. Well, let's pull it up anyways. Okay. Food was spot 5. That's not good. Energy 1.9. So up, but not as much as last time. So that's good. Commodities, less food and energy, spot 3. Okay. Vehicles 0. So new vehicles are really struggling. Used cars and trucks are actually doing okay. 2.2. That's interesting. Apparel down. Now that's also really interesting. Shelter. Okay, so the changes did not really come from shelter like I was thinking. Well, I mean, it was spot 4, so it does contribute, but not that much. Transportation services. Yeah, one thing I push back on is when people say some news data is priced in. Yeah, well, I mean, the whole framework, yeah. I mean, there's this thing that's like, it's priced in, and then you say, well, clearly it wasn't. Yeah. It seemed like a lot of people were expecting the number to be at spot 4, but since the market went down, clearly that's not the case. Clearly it wasn't priced in, right? Well, I reject that entire framework. The market cannot price things in. It tries to price things in, but it can't. It can't. What really determines, it's really all about orders. Right? Like this is where it gets so interesting. Because the market is not really very efficient. That is to say that current market prices do not reflect all available information. If you take all of the information that we have about the economy and you bring it down into like, what is the price that it should be? We will never be at that price. And we don't really get that price until you get out to like a 3 to 5 year horizon. Okay. So if the market is not efficient in that manner, is not informationally efficient, that means that you have to track the state of the economy yourself. You basically, you have to look at that and like, what is the economy really like, and track that completely separately from the market. Right? And then when you get these news releases, don't think of it in terms of, okay, what was the market expecting and what was the actual number, and ergo, how do they have to reprice the market to catch up to the new piece of information? Don't think of it like that. Think of it like, how many orders are going to come through? How many orders are going to hit the market based on that piece of information? Consensus. So you still look at like what the consensus was, right? But in a case like this, you know, sometimes like a spot 4 versus a spot 3 inflation wouldn't be like the end of the world. But right now, so many people are looking at inflation. You get even more orders come through. Hence, a huge move. Now, interestingly enough, as Ozzy was pointing out, the total range of this event is not as big as the last one. So, does that mean that there is less interest in this one? Well, I don't know. I think one of the things, like the problem is that liquidity conditions differ, right? So, looking at the range is useful, but something that would probably be a better measure would be the change in cumulative delta, right? Like what on that day, from the report to the end of the day, what was the net change in cumulative delta last time? Have Powell putting a damper on the report? He doesn't speak yet, does he? I did hear something from the news squawk, but it was not related to that. Oh, yeah. Powell putting a damper on the report. Well, you know, and that actually is a really interesting thing. That the, you know, part of the reason why this report, we were expecting it to be a little bit hot, is because of more cyclical components. So this report actually means less for the future trajectory of inflation than usual. Granted, expectations matter as well, and this is certainly going to put some fuel on the fire for raising people's inflation expectations, but Mir says why last CVD is important. Are you asking why, or you're saying that is why? No, because liquidity conditions differ, a better way to compare moves is to look at cumulative delta, because the orders is what really matters, right? So if we want to say how big was this move compared to last move, what we should really look at is what is the net change in cumulative delta, rather than what was the total change in ticks. Can we actually do that? I don't know if my chart... Yeah, I don't have it like that. I'm gonna have to open up a new chart. This might do some weird stuff, but let's do it on ZN, and we'll do it on 30-minute bars. And we'll load, well, why not load 90 days? 90 days, why not? Okay. And on this one, I'm going to turn off the caching stuff. Because I don't want it to actually save the... Okay, now I come back and I turn on tick replay. I'm kind of noticing a difference in the spread when I'm going to the higher time frame. I think that that's just kind of an aberration of the bar that we're on, and that will change when this 30-minute bar closes. Uzi says 40% chance of no rate cuts at all. What happened? Why did the market crash? CPI report was hot. I had a long before the release in ZN and double stop hoping to catch all of the down move, but my platform closed everything at the stop level last when oh my gosh. Was it a live one? Was those live orders? I don't know. Like, that's another thing is that somebody earlier was asking, like, would you set like stop limit orders before the news event and try and play it that way or something like that? And I say no. Like that initial move is something that can is just too volatile to want to be in. I mean, for swing trade, it's fine, but okay. When was the last CPI report? It was January 15th. Yep, there it is right there. Okay, so on January 15th, from the event, it was negative 362 and went to negative 314. So, 6 minus 1, 5. So it was a 50K change. It was a 50K change. And so far today, we have gotten 40K. Oh, so we're on track. We're on track. You know, well, maybe not for the first bar. Wait, back to the 15th. Yeah. Yeah. So that first bar, it was about 40K, and then when you get to the peak of it, there was another 10K more. So we're about on track. In other words, I don't think that I would be looking for a short on the anticipation that this low gets taken out. If I was taking a trade, I would probably be trying to catch a good place to sell in here and taking advantage of the extra sensitivity that it's going to have within this range. These degenerate gamblers that you're going to take a short and your stop is much larger than your target and all. This is paradise for these guys in here. Normally, the liquidity hole is so tight in ZN that you just can't do anything with it. But this one it's a relatively wide range and it's going to be really sensitive within that range, so you can kind of get away with that stuff. It never works out for me when I try it, but I've had live buy stops and sell stops on thin markets and got filled all the way at the end of the move. I only trade, yeah. Well, so going back to this, did you notice live action that this buy? What was with this? That right on the release, there was like a good 5K orders or so came out to the long side. What's with that? It was more than that. It was 6.5K bought on the news release, pushed it up, and then they sold it. Big whoopsies. Because here's what happened to me. I think I kind of got lucky on that, to be honest with you. Because what happened was I saw it go up. So my initial thought was, oh, it must be a really good, it must be a good number. And then I looked at the number and it was really bad across the board. And I said, oh, well, it's only come down like a little bit. But that was just because my DOM like repositioned itself twice in like one frame. Like I didn't see how far it moved down. So like I came in and I was taking a sell there, thinking that I was maybe getting something relatively close to the open still. Is what happened. And I was just lucky that I still caught a good enough spot that it continued through. What was oh, by the way, it's kind of looks a little wonky today, the thing. What's with that? Did I screw it up? I did. There we go. Okay, but what price did I get? 108.16 Okay, so maybe picking it up around 16 was maybe kind of what helped me. But man, I think that was lucky. Yeah, in fact, looking at it on the chart, right? I basically got it like right there. Yeah, well, I was lucky because I thought that I was getting it like right there. That's just how quickly it moved. Man, what a move. Gold already retraced the full CPI bear candle? Yes, now that is very, very good observation. Very good observation. So when we had the inflation scare in 2022-ish, every time that these reports came out and inflation was really, really high, we had a ton of people were like, oh, we should buy gold to hedge against that, right? And then gold would sell off. Like higher interest rates resulted in lower gold. But that is not what is happening in this situation. That gold interest rate correlation doesn't seem to matter. Maybe part of that is because gold is already kind of seeing a crunch, right? Because they did sell. It's just it's like it's retracing it, and perhaps they're saying, okay, yeah, those guys trading that correlation, it's still there, but we still think gold is worth more because there's not enough gold at the London Metal Exchange, right? I really expect this in ES to be, well, it's going to be at least a 1% down day. I think it's going to be at least a 1% down day in ES. And we are at 1.09. We could be as much as down 2%. But at the moment, I'm kind of thinking shooting for 1.5. Like I think that taking a trade before the open in the ES would, you might have it up. Oh my gosh. What a sneeze. I don't know. I'm not a very good e-mini trader, so you know, don't put me down on a trade or anything, but if there's a place in the market that there might be some opportunity left in this, I think it's in the equities. I'm wondering now if I screwed up and didn't double up on my short stop, it doesn't show on my account fills. I mean, I have definitely had some strange behavior on big moves like that when I had a position on. Right? Like I don't hold a live position going into a CPI release. But I can think of a situation in particular where I had a long expecting Donald Trump to tweet something, and he did. And then the market like really moved off of the tweet, and like the broker took me out of the profitable position. or something happened, like it took me out of the position without me, and part of that was like the platform was having a hard time keeping up and all of these other sorts of things. Well, I guess I don't have as much problem with that anymore because I have a much faster computer. But there, like that one, I really think that, there's this big push up and then the push down. I think that some of my data was a little bit delayed, and that might have been why I didn't see it push back down, how far it had pushed back down. But I guess the solution to that is that I really, really need to remember what was the price before the move, right? Pentalag, welcome. Oh, by the way, today I was looking at categories. I was like, does what category I put this under matter? Kind of, I have it under education. I think that's appropriate for my videos, but for the live stream, I kind of feel like it's really more news and politics. But, oh, I did that and it doesn't look like it changed anything. At least not today. It was slightly higher viewership today than normal, but probably because it's CPI. Did you know Anton? Nope. I actually think Anton Krill left before I was there, but I'm kind of skeptical of that guy too. Like here's the thing that I see is that the way that the institutional world works is very, very different from the game that you are playing as a retail trader. So, if you were an institutional trader trading like bonds over the counter, for instance, that experience might not really translate very well to retail traders. I think I kind of lucked out in that the information that was shared to me by the block traders, I was able to find some strong applicability to what we're doing. I guess when I say strong applicability, that's kind of like a I don't know if it's the right word. Maybe it's the right word or not. I don't know. Because like strong applicability to what we're doing is only results in a tiny little edge anyways, right? But, a lot of the guys that were traders, their skill was really more talking to people on the phone, Like most of those desks that I saw on the trading floor were, they had those huge phone bank things where they had like possibly like 60 lines on some of the guys' desks. They were calling people and like setting up deals between people, and what they were doing was very different from what we do clicking on the DOM and stuff. So I don't know what Anton did, but the things that I've seen, like he has a course, doesn't he? But like, I haven't seen anything about like there's valuable information, and I haven't seen that. Let's see. Let's look it up. Might as well look it up. There's a trader film with him. I don't know. Let's look him up on Trustpilot. Anton Kreil. Kreil. Yeah, I guess he just does not show up on Trustpilot. Institute of Trading and Portfolio Management, is that? ITPM. Okay. ITPM. ITPM.com. Only 5 reviews on Trustpilot, and they were poor. The Thailand program is a farcical exercise. Most mentees are down, but they will tell you they are up. The company and the owner have a lot to answer, along with all the mentors who never prop traded but executed orders at investment banks. More people should know this and should seek compensation for the mis-selling. The regulatory history doesn't match with anything remotely to do with proprietary trading if checked with the correct regulator and the firm. Nothing more than a money-making machine for the owner from selling courses. More people should raise concerns with the owner. The owner is also harassing students with private investigations and scores of fake accounts across social media. Ooh. I have about 4,400 hours experience as a retail trader and followed already a lot of trainings from others, but I bought the course. Big thank you. A very detailed one. How many hours of trading do I have? So if we start from 2017 to 2015, or sorry, to 2017 to 2025, I guess that's 8 years now, right? So if I'm doing, let's say, let's just keep it to 2.5 times 5 days a week, doing 12.5 hours a week, 12.5 times 52 weeks a year times 8. So I have 5,000 hours of trading experience. I guess more than that, because I do spend a lot of time outside of the trading, but actual like DOM reading experience. Okay. I'm not to 10,000 hours yet. Oh, Uzi's got a trading schools review. I love that website. They haven't posted anything in a while. let me really quick. Have they posted a new one? Was the last? Yeah, he hasn't posted anything since April of 2022. Oh, interesting. Nod 32 says that there's a JavaScript worm in there. Be careful. So, looks like it's just a tracker, but still. Okay, let's finish. This is interesting. Too much work to do, bro. Just gave up. Yeah. Well, I kind of think that the bro thought that he was gonna find a legitimate course out there that was gonna teach him to be a successful trader and yada yada yada, right? And he never really found it. Some courses were better than others, but I think that it kind of was like the thing that he wanted that didn't exist and he lost interest in it. Am I wrong? Or it was just too much work and he got bored, didn't want to do it anymore. Or he did find one and gave up. Oh, he did find one and so he didn't need to do the thing anymore. And he didn't tell us which one it was. Everybody, what was the guy's name? Because isn't he like on Twitter or something? Like there was like an about section or something that explained his like who he was and stuff. Oh, no? Abouttradingschools.org maybe? Oh, Emmett Moore, that's his name. That's right. Emmett Moore. There might be more than one. Might be more than one of these guys. Here we go. Here's his Twitter account. Oh. No, here he's saying I launched a new brand, traderschools.org. Is he really Guru Leaks on X? No. Oh, no, wait. These. I don't know. Well, no, so he hasn't posted anything since 2021. He just went dark. Gold up now? Yeah, good deal. So the treasuries, maybe they do actually push a new low because they've just been kind of skidding along the bottom there for a while. We'll see. Okay. I was going to finish reading... Focus, Seth. I was going to finish reading the Trustpilot reviews. Line of payments. I'd genuinely avoid this company if you don't want to be circumvented to a line of payments. Once you've bought a course, then you will need mentoring, which will set you back 15 to 30K. The latter is their flagship. Their Thailand program doesn't include flights anymore. Used to be the case. There's no track record of any of the mentors. So their Thailand program must be something where you fly in and they teach you? They say they intervene if they see something is going wrong in your account. For example, if you just consistently losing money, but this isn't the case. Several people have stated this. You also linked to broker accounts with ITPM, which has higher than fees than if you were to go alone and self-trade. Once you're done mentoring, you're by yourself. Don't expect them to email or check on your progress. This is a money-making machine for the mentors and for Anton. Once you've bought their course, you're a repeat delegate, and then you're in line for payments through webinars, Discord membership, mentoring if you want. $3,000 a year for their Discord alone. Also found there is a culture of, if you go against us, we will expose you to your friends, employer, and so on. Remember, when you sign up, you put your home address and all your details on the form. Bullying tactics essentially are at play if you step out of line. Have some sort of anonymity. This one is too long. I think it's clever for gurus to market themselves as cutthroat Wall Street guys, and then everyone who pays them tens of thousands of dollars to learn to be cutthroat Wall Street guys are right. It's an audience that's kind of easier to, get away with abusing, I guess you could say. Not a lot of Trustpilot reviews though. And nothing in there that explains like what their method is or what they're teaching, right? Okay. Now let's read the Trading Schools review. Oh man, he gave them he gave them such a bad review. He gave them 1.3 stars out of 5. Summary: Academy of Trading and Portfolio Management is yet another trading educator touting a fantasy lifestyle of shrimp cocktails and champagne, sports cars, private jets, helicopters, yachts, and exotic travels. The owner of the company is even claiming to be taking a rocket ship into space. Yes, folks. For only $3,000, you can purchase the video lessons that reveal all of the secrets to finally become a full-time professional trader. Unfortunately, the performance history of Anton Creel is nowhere to be found. So this is something that Emmett harps on a lot. He wants to see their history, and most of the educators don't. That one's not as big of a deal to me. I don't care if they made a ton of money. In fact, them making a ton of money is actually kind of a red flag to me. I want to see the empirical information that they're providing, right? Because kind of the thing is that if you really know what you're doing, you're probably not going to, if you're selling something and you're selling something based on your past performance history, that's like really unwise to do, actually. From everything that I've seen, somebody marketing their thing based on their past performance is in and of itself a huge red flag to me. Even a bigger red flag than somebody saying, oh, I'm so great and not providing the history, right? It's just best trading info I found helpful was listening to interviews by real confirmed traders. I would sometimes go back on charts the day they talk about and see where they entered and closed. Okay, anyways, claims of being a multimillionaire and retiring by age 25 cannot be verified. Claims of being the top rated trader in the world while working at Goldman, JP Morgan, and Lehman Brothers appears to be an alternate reality that feeds into the typical stereotype of a millionaire trader. And finally, why would any world-renowned multimillionaire super trader opt to become a lowly trading educator peddling video courses and $20 get-rich-quick seminars? Okay. The company is offering a smorgasbord of trading educational products that will surely make your trading dreams come true and unlock the secrets to making millions of dollars trading stocks, futures, forex, and commodities from a true master trader. Let's take a closer look at what is being offered. The Professional Trading Masterclass, which includes 12 months access to 28 core training videos and 8 bonus videos of secrets of hedge fund masters. Professional Forex Trading Masterclass, which includes 12 months access to 29 core training videos and several super secrets of billionaire traders. Okay, Forex is always a red flag to me. Yeah, what's the common denominator? Live action, don't tease us. Perhaps you need a little extra help from a master trader? No problem. Simply sign up for the 3-month Master Trader Mentor Program. Costs $7,000. Better hurry because space is extremely limited. Do you like live investment seminars? Well, great news, because the Institute of Trading and Portfolio Management is taking the world by storm. For only $20, you can sit anywhere but the front row. For only $247, you can sit in the front row, very close to the trading guru, and you get to enjoy a pre-seminar lunch with a true master trader. Mr. Anton Krill, hurry, because seating is extremely limited. Mr. Krill is a man in high demand and provides economic advice to world leaders, central banks, celebrities, and CEOs of major financial institutions. So that's another thing that I kind of think is a little... I do want to make a video at some point of like, influencer red flags, but I kind of feel like that the more products that you have, the more of a red flag it is. You know? Like, okay, you have like... Well, I don't know. Maybe this isn't really the case with this one. Like he has a master class, and then he has like seminars, and then he has mentoring. That's like 3 things. I don't know. Live action says they all trade off of previous consolidations close enough to smell as... Oh, yeah. I'm telling you, man, the liquidity whole thing is real. Whether you can make money from doing that's a different question. If you are a professional, you can make money from that because you have scale. But if you're just trading one contract... Anyways. It appears that in 2010, Mr. Krill appeared in a TV reality show titled $1 Million Traders. Oh, that's what you were talking about. Mr. Krill appeared as one of the trading instructors in the show. The show claims that Anton became a millionaire by the age of 25, though none of this can actually be independently verified. It is important to note that the producer of the show and Anton Krill were close personal friends before the production of the reality show. A review of Anton's biography and supposed personal history includes a charming story about how he grew up dirt poor in the UK and then he began trading at the age of 16. At age of 20, his trading was so amazing that Goldman Sachs, that's bullshit. They don't hire 20-year-olds at Goldman Sachs to trade. No.
Block by.
I think he probably did work for Goldman, but I think that he's exaggerating his experience there because the people that they pick to trade, they get them out of school. You don't go straight out of high school. I think they need areas of huge, yeah. Like basically, these liquidity holes end up providing the most liquidity for large institutions to transact in. Cost basis is at 12.5 now. See if it gets there or not. You know, because it might bounce to it, but it could also just like continue to go sideways until the cost basis comes down, right? Okay. Word of his amazing abilities quickly spread throughout the world's trading communities. At 24, he claims to have been recruited by Lehman Brothers, where he worked for 2 years. He built the #1 world-ranked European trading operation. He also claims that he then joined Lehman and JP Morgan, where he went on to earn millions of dollars. When he was only 25, he became disillusioned with the world of international finance. He then decided to sell everything and become an international traveler. He then traveled all over the world in search of deeper meaning and to discover the meaning of life. After traveling through 25 countries and interacting with common folk, he had an epiphany. He had discovered his true trading calling. He wanted to become a trading educator. Good grief. Seriously. And spread the wealth of his financial knowledge to the world. The idea of the Institute of Trading and Portfolio Management was born. Now anyone could become a millionaire trader, just like Anton Krill. All for the low price of only $3,000, but people should hurry because the price is increasing at any moment. Bro's life is Lord of the Rings. Based on that common denominator, it would benefit to trade off high volume nodes on a volume profile. Not quite, because the thing is that those would be areas that are going to be high volume nodes on the volume profile, but when they start trading it, they aren't. You have to see it before it becomes the high volume node. At tradingschools.org, we've heard of all this stuff before, and too many times we've discovered the supposed guru is just a charlatan looking to hustle a few $1,000s by suckering in the newbie trader for what remains of their credit card limit. With Anton Krill, we begin our investigation by contacting him directly. The number one question, is this guy really a millionaire trader? Is there any track record? If any track record of successful trading exists, he certainly was not willing to share it, nor is he willing to share his supposed performance with prospective purchasers of his trading products. Anton claims to have managed one of the largest trading desks in the world, which he claims was rated #1 in the world for performance, yet no articles referencing this information exists. Is he really a millionaire trading? In all honesty, nobody knows for sure. Can we legitimize or validate any of his story regarding his work history? Yes, in fact, a prior work history of Anton can be found posted on the UK's Financial Conduct Authority. Anton is listed as an investment advisor for Goldman Sachs from 2001 to 2004, and then Lehman from 2004 to 2006, and JP Morgan from 2006 to 2007. But was he really only 20 years old? Okay, let's see if we can find when it was Anton Krill birthday. No, that's the badminton player. That's funny. If you traded before the high volume node, then that wouldn't be... No. Why do you say that? If it traded before the high volume node was created, then it wouldn't be a high consolidation area. I think that you probably have an idea of it's all you. You have this idea that's false. Probably. Right? You probably think that a lot of volume trading there is going to make it move away from it, right? Okay. I mean, look back on the stream. I predicted where a high volume node was going to happen, like well before it happened. Like it literally took my trade off right in front of it. I guess 07 is the high volume node too, but 09 is where I got out. Is number 2. Okay, I had that order in there before that price ever traded. How did I do that? Live Action says, I don't think he likes day trading, but Anton Krill, that might be the case too. That's kind of one of the things that I'm trying to suss out. You might lay your chart horizontally across your entire screen, and you'll see every day on everything market legging off of these areas, even in a fractal way. That doesn't make sense, but okay. Let's continue reading here. Word of his amazing abilities quickly spread throughout the world's trading communities. Oh, no, wait. We need to scroll down. More. The big question that prospective consumers of those products need to ask themselves: if Anton Krill is a registered investment advisor, does this also mean he is a millionaire and a world-class trader? My mother has a registered investment advisor that advises her and has worked at JP Morgan for 20 years. In fact, he is vice president of JP Morgan. One of many thousands of vice presidents at JP Morgan, yes. This is a corny title, secret with big banks. Everyone gets a fancy title, which means very little. Yep. A VP at a bank is really more of a community
Block cell.
title. It basically means you've been there for a certain amount of time. How would I know? Because you've been watching the stream for a week and I've told you like 3 times now how. I really don't feel like you're completely paying attention. Right, remember? You come in and you have an auction every 5 minutes, and there's going to be a certain amount of buyers, there's going to be a certain amount of sellers, and then these guys in the middle are the people that get filled. So the next time that you do the auction, there's not going to be as much liquidity here in this spot. There's going to be a hole in the middle, and that hole will take some time to fill in because, you know, it just takes time for people to submit more orders. And so it takes about 45 minutes before it becomes this sort of a thing, right? This is a measure of like the liquidity, right? So what ends up happening is if you were in this hole, if price moves up, they run into the offer side liquidity. They move down, they run into the bid side liquidity. And so price tends to stay in this location. And the amount of liquidity that's offered at any given time is lower in this area. But what happens is, because we stay in that area for so long, it often ends up becoming the volume point of control. In other words, somebody executing a large trade, they can execute more volume in this area despite the latent liquidity at any given time being lower in that spot. So it's kind of this counterintuitive thing. They're going to trade a lot in there, and by the time that this volume profile, that the liquidity has healed, you will see that spike in the volume profile. You will see that, you know, spot right there. Right? So how did I anticipate this? Well, I kind of knew based on how far it was likely to go and how many orders were coming in. I came into that spot. We were kind of starting to reach the cumulative delta levels. And then I started to see really big transactions there. I started to see a large amount. So that clued me into that there is a lot of resting liquidity there. There were other people other than me looking to take profits at 09. So I took it off at 09. And then shortly after that, and there was the push through it, right? Shortly after that, it started to show all of the behaviors where the inside bid and offer was really flighty. It would pull really easily. We were often trading up and down on hardly any contracts. So it was like large amount of volume all at once. And then after that, market makers not putting up as much liquidity. That creates the hole. It creates an area, which was here basically, where price just kind of gets stuck. And it stays there for a very long time. And it stays there for so long, literally exactly where I got out at 09 is now the point of control. Right? aren't you then trading off high volume nodes on each side? Well, not exactly. I mean, I want to be in the trade before that happens, and I use the hole to get out. Right? But I think in this case, you know, me seeing that 09, like picking that 09 level out from the beginning, that was kind of a little bit of a just a really specific situation. But we were able to predict that that was going to be the high volume node well before it happened. And we were going to see these things. And the thing is that when you start doing it, that volume profile didn't look like that. None of those prices had traded yet, right? So we're seeing a condition in the liquidity on the DOM here that will predict that you're going to get one of these, essentially, long before it happens. And I'm kind of saying that if you want to trade off of the high volume node, you know, like, by the time that you can see that it's the high volume node and everything, like the best opportunities are already past, right? Like the best opportunity here was the trade to down into the 09 area. And then ever since it hit that, it's kind of been a shit show, hasn't it? By the way, S&P kind of getting a decent bounce here. Yeah, getting out on the hole is the best thing I learned from you. Yeah, so think of it like, because well, not think of it, but let me explain something. Somebody executing a large order will create the hole intentionally. They need to execute a ton. How are they going to do that? Because if everybody knows that they're executing a ton, they're gonna front run them, and it's gonna push it up, and all of these sorts of things. So what they've learned to do is they've learned to do it in waves. Push it until the market makers start to get freaked out about it, essentially, right? And then back off. So in this case, it was actually kind of like did a little bit of this, and then they backed off. You get the short-term mean reversion period, right? Goes like that. So they created the liquidity hole by pushing it and all of this volume executing here. Then they back off. Price gets stuck in that hole. And then they have to execute more slowly, but they can get way more volume filled in this hole than anywhere else. Right? So for me, what I want to do is I want to make money off of when he pushes it, right? So I'm kind of facilitating what he wants to do, right? Because he wants to sell, right? So what I've done is I've anticipated that he's going to sell. I sell it first, and then when he forms the liquidity hole, I provide liquidity to him in that hole. And we both benefit. You see? Yes, that's why if I miss the initial at times, I won't bother stress. Yeah. Like if you don't catch this first, you know, if you don't anticipate the move, this is a shit show. You don't want to trade this. Well, you can scalp it, and I don't know, some people seem to do it and do okay, but every time I try doing that doesn't work. Yeah, I would view that whole it does create an inside candle. Yeah, you're right. So when I was talking to like block traders at Goldman Sachs, you know, it was like, so you guys don't really use charts at all? And it's just like, well, you know, I do use some charts. It's just like completely different from the way that normal people do, right? Like what she liked to see was when price was turning in on itself. So like inside bars, you have a bar like this, and then you have an inside bar like this, and she wants to see it when it's doing this sort of a thing, right? Maybe it comes here, but it's like the bars are continually turning in on themselves, that's what she looks for, because they're looking for the liquidity hole to execute in. That's where they're going to be able to fill the most of their orders. Yes, it's consolidating. It's consolidating. But I use that phrasing because it's kind of a pattern that, like, I think everybody sees, but I don't ever see people in technical analysis talk about, like, just the candles like folding back on each other. But yes, it's a consolidation. But we want to see it right here, right? Because if you see, oh, it's consolidated, and then I do something here, then that's not a good trade, right? Anyways, I don't know. If that answered the questions or resolved the conversation or what, but I'm going to continue reading here. Fantasy lifestyle. Everyone is familiar with Timothy Sykes and his rented Ferraris, mansions, bikini models, etc. That is what I like to call trader porn. Tim Sykes was an early pioneer of the marketing concept. Create a fantasy world of what the trading public dreams about. Trading from a laptop. Taking exotic vacations, driving Italian sports cars, dating bikini models, flying helicopters and private jets, bottles of champagne flowing freely, beautiful people enjoying parties and poolside retreats, private yachts. All you need is a laptop computer and the secrets of trading for $5,000. Trading Schools has written extensively about this new class of online hustlers and charlatans. Let's not forget Fortis Alerts, Bulls on Wall Street, and Infinite Prosperity, all fine examples of trader porn. Yeah, Bulls on Wall Street, they were the ones that got hit super hard from the regulators, right? It seems that Antron Krill is of the trader porn variety. His Facebook page is a testament to his supposed trading greatness, and personal wealth included are exotic Italian sports cars, beautiful women, exotic locales, champagne bubble. Even a rocket ship, no kidding, even pictures of a supposed rocket ship that is going to fly him to outer space. It is all a red herring. It is meant to distract from the obviousness of no track record and numerous inconsistencies. The following are only a few images. What is obvious? There's no performance history. These are all shiny objects meant to convey a virtual fantasy world that you can be a part of. So, you know what? Maybe what I should do, if I ever become like a super famous, YouTuber, and I'm making millions of dollars, I should do what Emmett does and buy everybody's trading courses and critically review them, both because Emmett no longer does it, but also because I don't like the way that Emmett does it. Like, this is good information in here, for sure, but what I want to know is what is in the course. Is there any empirical information about the course? That's what I want to know. Because there's one of the few things that are kind of marketed that they have real data backing up what they're doing, right? But nothing in here about that at all. Nothing about that at all. 148 comments. Here's one person mentioning standard deviation. Why is my eyelid twitching? It's so annoying. I wish I could figure out what is the deal with me. Maybe I just need a salad. You're writing a review on a course you didn't even... Oh, did you not take the course? Anton is totally different. He teaches you how to think as a hedge fund manager and generate your own trading ideas. Oh, so he's trading macro trading? Maybe that's actually good. I don't know if he'd be teaching you anything that you couldn't figure out on your own or read from books, but so that's some information. Apparently he's anti-technical analysis. Like what I'm reading from this comment is that maybe it actually does as a course with maybe some useful content in it, but I'm not reading anything that's worth $5,000. You know? But pricing education is kind of a iffy thing anyways. I don't know, man. It like as I'm reading these comments on the tradingschools.org review, the point about Anton and ITPM is that they absolutely do not purport to offer trading advice. They actually scorn nugget hunters or bottom feeders, as they term those seeking hot tips. Their programs are designed to teach traders how to do their own work, come up with their own trading ideas, and achieve success or failure on their own. It really sounds like that they're doing what I'm doing, except for that they're charging you $5,000 for it. Like, the one setup for me is on a 30-minute candle. I wait for a break of that. If it fails, and I take the other side. Want to backtest that? That sounds like worth backtesting. There's a doctor, I forget his name, who already did this review of trading rooms. Bottom line, they all stink, except for I think he found 2 that were confirmed as real deals. Learn that setup after. Yeah, because the illegal immigrant, there is a real reason why it does that. I'm very skeptical that it actually results in an explicit risk reward sort of setup sort of a thing. Like, you get kind of the key to what I'm telling you is you gotta get in before the big guy comes in and does his thing. So you kind of have to know what the big guy is going to do before he does it. That's very different. But there is this real thing that if you have a lot of contracts and you execute in a certain way, you can predict what the market will do based on how you can predict how the market will react to you. And it happens because of the way that a limit order book works. Like, it's math. How many contracts should I play in ZN if I have a funded account at 50K? Okay. So, on this one, if you are doing a funded trader program, then really it's kind of to your advantage to trade as big as you can. Okay, because if you really trade like the way that I would recommend that you trade your own account, you're probably not going to pass the combine fast enough. You kind of get into this thing where it's like, okay, you trade like that, it takes you 2-3 months, and then after 3 months you fail the combine, then you've just wasted 3 months on the combine. When really what you can do is you can just leverage up and pass or fail within that 1 month, and you should be able to pass it 30, as long as you don't break like the daily loss limit rules. You should be able to pass it 30% of the time. seems that a lot of people break those rules for some reason, though. Okay, but so like most of these funded accounts, I think they'll let you trade 3 contracts, and that's probably what I would do. On ZN, I'm not sure that that's enough. Like, I would probably want to trade even more than what the combines let you do, which is why most of the people passing these combines are trading equity indexes, oil, etc., because they're more leveraged instruments based on the number of contracts that they let you trade. And that's not anything to do with like an edge, or, you know, I'm kind of telling you funded trader programs are kind of a crapshoot and not worth your time. Another YouTube paper trader might have just accidentally exposed himself as a paper trader a few days ago, funny enough, while trying to expose Patrick Wayland. Oh yeah, I saw that. Oh, I kind of missed that guy was showing. Oh, like I saw that, and I thought that they were talking about Patrick Wayland being the paper trader. But now I see that they're actually talking about that guy. Oh, that's so funny. Yeah, that was actually what got me started on the, what if I change the category for my video? Because I was looking at, like, how do different channels categorize their videos? And I think it was Patrick that had it listed as entertainment. But most of them they listed as education. I don't know why it works. Well, I'm gonna bet you that it doesn't actually work, but let's try it. Why not? Why not? Let's open up a second window over here so I can copy some code from some other strategies to kind of do this more quickly. But we're gonna come in here into Mizik. I've made a new folder for strategies from other people that I'm making to test them for them. Okay. So we're just going to call this one, now we'll just call it inside bar breakout. Okay. So the difficulty with this one is that you would think like, okay, so I should use the 30-minute bars, right? But we're looking for like a breakout of the 30-minute bars. So I think what we could do in this one is we could have multiple series. So what we're going to do is we're going to run it on a 1-minute bar. But then here in the configure, let's do this to be dot minute and make a 30-minute data series. Okay. So then we have here if bars in progress equals 1. So the main data series, the 1 minute that we're going to run it on, that will be bars in progress 0, and the 30-minute will be bars in progress 1. Okay, so when bars in progress is 1, we're going to look for an inside bar. So this would be at the close of that 30-minute bar, if well, okay, so let's see if we understand what we're saying. So we have a big bar like this, and then we have an inside bar. Okay. Do we wait for this inside bar to close? Right? I'm saying from this point now we are looking for a breakout of that bar. Right? So basically what we have is a what I would call it cascading conditions. So the first step is we find an inside bar. The second stop is, or the second condition is a false breakout, right? Now defining the false breakout, there could be some complexities in that, but we'll get to that in a second. Okay, let's program this part. Okay, if the close of Oh, actually, I think we need to say closes of 0 is less than the closes. Oh, where are we going to define an inside bar? Is it going to be the open and close are, or are we going to go based on the high and low? I think I have some where I did like inside bar sort of indicators, right? Like IR inside bar, I think. Yeah, inside bar. The high is less than the high and the low is less than the low. Okay. Oh, the illegal immigrant is saying that, in fact. Okay, so if highs of 1, so highs is like, high would be like the current data series, but highs is like we have multiple series, right? So remember that the 1 minute is 0 and the 30 minute is 1. So highs of 1, 0, that would be the current bar, is less than highs of 1, 1. And lows of 1, 0 is greater than lows of 1, 1. So this right here is inside bar identified. Okay. So I'm going to, right here, I'm going to say public int inside bar. Oh, that's weird. This computer. Our audio went out. Hold on. Oh, maybe we just finished the playlist. I didn't realize it. Okay. Public int inside bar equals -1. Okay. So if we have an inside bar, then we say, oh, wait, we need to make this an underscore to tell us it's an instance variable. Inside bar equals current bars of 1. So then we identify the inside bar. Okay. So I'm going to jump ahead a little bit, and we're going to say now, look for breakout, right? So if bars in progress equals 0, oh, actually we should public double inside bar high, public double inside bar low. Okay, so high, low. Okay. So we know when the inside bar happens, and we know that there is what the high and low are. And basically we can look at this inside bar variable here to tell if we've already identified one and we're looking for a breakout, right? So now the next question is, what do we define as a breakout, right? So here we have a bar. So are we looking for, actually, let's draw it a little bit differently. Let's draw it like, here's a really big wide bar like this. And here's a really big wide bar like this, right? And then we might have price in here, and then, you know, it's like this. Okay. So then what happens on the next bar? What is a false breakout? Is a false breakout like that? Do we assume that the first break is always going to be false? Or are we waiting for it to break out and come back in? And is there a time limit on it, right? Like, so if we wait for it to break out and come back in, is there a certain amount of time by which, you know, it's gone on and we've decided that it's actually not a false breakout, it's a true breakout? Break of the inside bar, but it works better if it breaks the previous bar and then closes inside of the previous bar. Whoa. So you're saying if you get a bar that's like, let's say it starts here and it ends here, but it has a big tail like that that's above the outside bar? I mean, that's more specific. We can program that one. It's just, that's going to be a lot less common, right? So should our condition be just the break? It breaks the previous bar, but closes back inside of it in the 30 minutes. Okay, but at what point do you take the trade? Do I wait for the 30 minutes to close first before I decide that it's a trade? You get what I mean? This is where all the little teeny tiny nuances come in that make or break it. Right? Play both, 2 entries. Okay, so I guess I'm not completely following. So here's our inside bar, right? Well, let's just like do these, right? It breaks out and then it comes back in and closes here, perhaps. Okay. Do I take a trade here? Or do I take a trade? Let me redo that. Okay. Do I take the trade here? Do I take the trade here? Or do I take the trade here when the 30-minute bar closes? A, B, or C? If the bar closes back inside the previous bar, doesn't take out the inside bar, I take the break if the candle on the next bar. Okay, that's something different. You're saying I got an inside bar. If I get another inside bar that's like this, then price goes down, I would take it here, right? Yeah. So that's one setup. But what's the other one that you're talking about, though? So you don't ever take, but you still take trades within this bar too, right? Do we take any of A, B, and C? D. Wait. The other one happens in one candle. Break the inside bar, then retraces back. I enter the moment the inside bar taken out, meaning taken out on the other side right here. ZB range now equivalent to last CPI. Cool. Okay. Sorry. So I said. So it's B. I said that was A and this is B, right? Something like that. And then C was the close of the bar. You're saying you take B. Okay. If inside bar is greater than 0, that means that we're looking for an inside, that we've already identified an inside bar, right? If, oh, actually, maybe we can just combine them. Okay, if inside bar is greater than 0 and close of 0, 0 is greater than inside bar high, and that's a false breakout, right? Let's not call it breakout. Let's just say inside bar breakout long. Breakout short. Okay. Do I need to make them long and short? If inside bar is greater than 0 and breakout bar long is greater than 0 and the close of 0 is less than inside bar low, enter short, call it false breakout short. And this one will be the opposite if it's higher than inside bar high. Enter long. False breakout long. Okay, now next thing is, what are you doing with this black screen? It's code. We have to have a way of resetting it, right? If inside bar is greater than 0, so let's see here. We're gonna have this bar. It's gonna come in, and inside bar is gonna be -1. So it's gonna skip this. And then the next one, it's gonna be -1 again. But by the end of the bar, we set it to, some number. Okay. Then when we come in, again, it's going to be some number. So if it's not 0 on this bar, essentially the setup has passed and we need to reset things. So I'm just gonna copy all this and I'll do it this way. Fix the few little compilation mistakes. Okay, now I do not have profits and targets set on this yet. So what I'm going to do is just, let's see here. What's the simplest one to do this with? Yeah, I'll just do this. In the configure, I will use set stops and targets and set those to properties and some properties here. And what are we going to do this on? Are we going to do this on ES? Something like that. Okay. So, if I add a data series, let's see here. Hold on a second. NinjaTrader. I want the charts to show correctly. So let's see here. NinjaTrader 8 and chart indicator. Can you add bars? I don't know if you can. You may have to do it manually or something. I don't know. We'll see. Okay, maybe I can't do that, but that's okay. We can sort it out. So now what I'm going to do is we come in here in sidebar breakout. ES 1 minute bars. We're only going to do till the start of this year at first, just to see that it's working correctly. Okay, so that right away didn't work. So I would expect there to be some issues. Oh, okay, but the issue was a pretty silly one. I should have expected. Yeah. If current bars of 1 is less than or equal to 1, no. Yeah, is less than 1. Return. Should make that error go away. Ta-da! Hey, it actually did it. 71? No way. No, unprofitable over that period, but oh, come on, it doesn't let me add data series in here now? Lame. I have a great way to like display it and everything, but like drawing tool, chart style, data box, indicators, properties. There's no way to add data series on it, huh? So this looks like a one right here, right? So there's the 30 minutes. And then there's the inside bar. And then it breaks out. No, that's not correct. That's not correct, is it? I think we have some bug in our logic. Right. Breakout long at that point. So how did it get that? All right. So the first thing we do is if inside bar greater than 0, which it won't be, nothing happens. So then in here, inside bar, and we set something. Okay, so then we come into here, because inside bar will be greater than 0. And we'll say the closes of 0 is greater than the inside bar high. Then it should set breakout bar long equals current bars. Right? Oh, okay. So there's your problem right there. Okay. Okay, that looks a little bit better potentially. No, because it should have to come all the way down here to get out, right? Breakout bar long. When it does that, oh well, but it doesn't even close above it. Oh, maybe it does. Oh, yeah, it does. It does. It closes above it. So at that point, breakout bar long should be set to that. Okay, then inside bar is greater than 0. Breakout bar long is greater than 0. And closes is less than inside bar low. Am I setting the inside bar low incorrectly? Okay. This requires more serious debugging. I probably shouldn't do this because if I break and it'll screw up my data collection over here. I'm not going to do that. I'm not going to do the Visual Studio thing. We're going to have to I'm going to just do some print statements to try and understand what it's doing there. Powell is speaking, by the way. Okay. So we're going to run it again. Wait, what? Maybe I just didn't like compile it correctly and it did fix that issue. So what's the most recent trade? Should probably be this one right here, right? Okay, very good. So here we have. Ugh. Actually, let's use the fancy drawing tools. Here we have our R. Now, that doesn't make sense either. How is it doing that? Oh, did I? No. Is there anywhere a trade manager that is like way too broad of? I don't understand what you're asking for at all and stuff. Man. Well, what about this one? This one doesn't make sense either because that's not a inside bar. Maybe I can do it like this. I hate it when I do something like this and I immediately get into one of my bugs and it's like really, really hard to find the bug, you know? Oh, I'm like, I forget how to make it show historical executions. Okay, there we go. 30-minute. Box. Okay. There we go. Actually, that's not gonna be good enough either. Do I not have the Oh. Oh, that's crazy. Okay, hold on a second. This is the one that you have to like restart the platform to get it to work. Oh, no, wait, it's compiled. Yeah, it is. Fine. Why can't you just use 30-minute candle? Well, because you want to be able to trade it midway through the candle, right? So you want to use multi-series ones. Plus, it's a good way to show you guys how to make multi-data series strategies. Some of the complications and issues that come up with multi-data series strategies. Granted, I don't think that the bug that we're experiencing is that. And maybe there's not a bug. Maybe it is actually doing what it should, and I'm just not seeing it. I don't know. This right here. Data series. Come on. Multi-period candles. There we go. Okay. I see. So, but that's not an inside bar. Oh, I'm not looking for where's there? Oh, we have to turn the strategy on again. Enabled. Okay. There we go. Yeah, see, this doesn't make sense. This is an inside bar, but it's taking it midway through the inside bar, right? Like it's not, doesn't that make sense? He's not resetting correctly. If bars in progress equals 1, and then if the inside bar is greater than 0, then I reset it. Six 103. Yeah, see, it says when it takes this entry right here, it says that the high is 6103 and the low is 610007. Oh, 6100.75, which is where it takes the short. So it's reading some inside bar probably from like way back. Okay, idea. This always resets. don't think that worked. Okay. So there's a way for us to debug this. Here's what we can do. Print bar inside bar. That will tell us which bar it actually is. And then, so first we're going to do that. Come over here, refresh the chart. And then I can add one of my free indicator suite indicators, which is Speculator Seth free current bar debug tool. Make sure that it's on the 30-minute bar. There we go. Okay. And so it is saying bar 2686. So it is saying, am I getting that right? This bar 2686. Oh, I see. I see what's happening. Here it's setting this too quick. Like it's not doing it when it Okay. So this is an issue with multi-data series. Okay, so first we come in, you have bars in progress, resets things, and then if the highs of the previous bar. Oh, I've got this backwards. The high of the previous bar has to be... Oh, no, wait. The high of the current bar has to be less than the high of the previous bar. The low of the current bar has to be within, right? Lows of 1. And then lows of 0 is greater than. And highs of 0 is less than. Okay. But this should only be called at the end of this. Like this. Okay, actually, hold on. Interesting. 'Inside bar identified'. Let me add the current bar debug tool again, but this time on the main data series. Okay, cool. Trudeau is speaking at the moment. So it shouldn't do it until 8,584. Oh, that doesn't make sense. Hold on a second. First thing is space there, then we can read. 8559. And it says that it identifies it at 88534. Wait, how is that? Oh, you know what? Oh, that's so crazy. Oh, okay. I am totally misreading this. Okay. Let's change something really quick here on this 30-minute bar. Like, instead of doing it candles, let's draw the box. There we go. Okay. This is an inside bar right here. Okay. So this is an inside bar. It sees a false breakout. It enters in. Oh, it's totally doing the right thing. Okay. It's totally doing the right thing on that one. Okay, here's another one. Inside bar. It breaks out faults. And then, oh, why does it not go? Because it has to get above the high of it. So then it says it's a breakout long right here at the very end. Okay, it's doing the right thing. It's doing the right thing. This whole time I thought that I was wrong. But actually, it was doing the right thing. So now let's look at the... Oh, it's terrible. Your strategy sucks, illegal... No. Let's go back a little further now. Oh, that's pretty sucky performance, dude. Now, granted, we do have like a set stop and target and everything, but like, okay. So the overall result looks random. Let's come in and let's just check to make sure that there's not anything funky going on with MAE, MFE. Oh, no, that's interesting. There's actually a lot. There's a lot of losers that actually had a reasonable amount. This is actually doing kind of what I thought it was going to happen, though. Like, so you're saying, here we have a bar, right? And here we have an inside bar, right? And then you're saying, it broke out the wrong way, false breakout, and then it went to here, right? And so then you're saying, oh, I should go long on the expectation that it's going to do that. But what it actually tends to do is go back into the hole and just stay in the hole, is I think what it's saying. What about MFE? Yeah, there's plenty of losers that had a reasonable amount of excursion. Like, actually the entry, it says the entry efficiency isn't too bad. I don't know. That's not terrible, actually. Gives you enough of a push to get a stop to break even. Yeah, but I don't think that the like messing with the profit targets and all of that will actually help it. So hold on a second. Let's just remove some of these old results now that we don't need. Okay. So this one has a negative Sharpe ratio and everything. Okay. Now we come back to, let's say bar breakout. And we're going to flip these. So it's already had one false breakout, and it's breaking out on the other side. And I'm going to say that's a false breakout too. And how does that perform? Oh my. What? No way. I didn't think it was going to be that good. Okay, the Sharpe ratio on it is shit. Okay, but it actually did come out profitable. Let's see the chart though. Let's see the where is it? The cumulative net profit. Oh, okay. Okay. Yeah, that's interesting. That's really interesting. See, the thing with like setting the like stops and targets based on the previous candle and everything is now you're kind of adding in this other component, which is like, okay, so volatility, the volatility should be based on like the size of the long bar or something like that, right? That one's kind of a little bit fuzzy when you're talking about this short of a time frame. But it will impact the performance. It's just we really want to see it like on its own first, right? Onto this one, what we can do is we can say like, let's do it. Let's go from 4 to 80. No. Optimization. Let's do back desktop optimization. We'll go from 4 to 80 by 4s. Is that going to take too long? Let's see. 400 isn't bad, but it's like a 5-year back test period, so that kind of gets a little iffy. That's going fast enough that I think we can deal with that. There's a lot of inside bars where the inside bar gets identified and there's not a break like that. Which kind of turns into your second setup, right? Or what did it pick? Oh, very interesting. Now let's take it back even further. 2014. This is probably not a fair test because you go back to 2014 and the market is not as volatile, right? So it's... Okay, but it still says profit after all of that. So what it kind of looks to me is that you are seeing a behavior, like really what's happening is the liquidity hole is a thing. So it does kind of create this situation, but how the situation resolves has kind of shifted over time. There's regimes to it. There's one regime where it does the false breakouts, and there's one regime where it doesn't. If I come back, we'll do one more test and then probably got to get going. Go back to the way that it was. Terrible. It's terrible. But we'll come back and we'll do this thing again. Can you change the stop and targets and all of that sort of a thing to make it work? Yeah, there's no way to make it profitable. Huh. Well, that kind of makes me wonder, though. What if you just take a trade when there's the breakout? Oh, actually, we can do that really quickly, too. Right? We can just say here, like, who cares about all this crap? Just fade the breakout. I don't know, man. I kind of feel like this is the first time where somebody in chat mentions a specific setup and we backtest it, and the exact opposite of the setup actually turns out to be pretty okay. Like it's definitely not something that I would trade, but like it's okay. Usually you do the opposite of it and it's just as random. I do think one thing that is kind of helping this is that because you're using 30-minute periods, it cuts down on the number of trades and stuff, so that kind of helps it a little bit. Not as profitable. The first breakout, not as profitable. And it picks targets that are much larger as well. Interesting. targets and stops that are much larger. Is this a case where maybe we should look at an optimization graph? Net profit, target, stop. Nah, yeah, it's just standard parabola. It's kind of showing that your stop and target don't really. You just want it to be as big as possible. With a little spot right here that's kind of. I like to see the win rate high, but you know the. Oh well. Target 80, stop 68, and the win rate is over 55. How does that not have a good Sharpe ratio? Just because it lost over here? During the COVID market, it was like super crazy. I mean, that does seem to kind of match up. I wonder if I just change this to 2022 and only get the good stuff. Oh, abort. Oh gosh. There we go. Oh wait, why did I undo that? I got this wrong. This one. There we go. Okay, cool. Now it's still only 0.08s. It's a risk-taking strategy, but there's a period of time where it works. Kinda interesting. Most of them have pretty bad adverse excursion now. Looks random. How about you? Oh, well, yeah. Okay. Sure. Oh, I hate you guys. These, like, okay. You're totally picking up on something. That's the reason I hate you is because it's just a scenario that I don't like to look at and or talk about. But basically, you can sit down and you can say, well, the S&P 500 tends to move up, so let's only take longs, right? And yeah, you probably it's gonna look pretty good, right? Yeah, totally. Yeah, you get the Sharpe ratio. It's 0.3. That's not bad at all. The issue then is we kind of have to do a comparison then at that point. So I have this back test that's, let's see here. Don't I have one that's just called buy and hold? Yeah, buy and hold once. No, just buy and holds is the one that I think we want to do. ES, 1 minute, food commission. There you go. Okay. So, oh, that's interesting that when you only go long, well, there's a couple of interesting things about it. For one, the percent profitable is not as good. Percent profitable is not as good. But the Sharpe ratio is better than the just buy and hold every day. So maybe there's something to it. That this one had a total net profit almost as good as buy and hold, but a much higher Sharpe ratio is impressive. Although we would have to go back and use a bigger time period at that point because it's only 3 years, right? Back to 2019. Do that one, and then do it in this one at 2019. It's almost half. So I don't think I could start a fund with that. I could do like what how could I do this? Could add a filter. Well, I think part of the problem in comparing them is that you have stops and targets over here, right? So if I just came in here and like commented these out, let's just comment out the target. Okay. And then we're gonna do this. Let's turn this one into an optimization run and just this bit right here. So it should only be like 20 runs or whatever. There we go. Okay. We're able to get it to 132 by holding it to the end of the day. But then you get a Sharpe ratio less than the S&P 500. So basically, by only going long, what we're doing is we're taking advantage of the propensity for the S&P 500 to always go up. And at that point, why not just always go long at the start of the session? Going long at the start of the session every day performs better on almost every metric. You take the stop out. That would be another interesting bit. That'll probably increase the... No, actually didn't. Not too much. Oh, no, it did. Yeah. It increased the total net profit a little bit. Just the way that it works. No stop that tends to be better. because all that a stop and a target does is just limit the amount of volatility that you're exposed to, right? But this is just kind of getting back into the whole argument that is that on a short time frame, on an intraday time frame, that is just Brownian motion, right? And if it is just Brownian motion, then you take that Brownian motion component. There's no way to gain edge from trading that Brownian motion. Doesn't matter what you set your stop and target and however else you deal with it, right? And the quants on the options side, well, they have ways of taking advantage of that with options, right? But all you're showing still is that the market is pretty random. Right? Even though this is actually a really, really great example strategy, because we got to show a multi data series strategy, even though it was like all on the same instrument, but working with multiple data series. We showed like sequential setups. So you have a setup where like first this thing happens, and then this thing happens, and then this thing happens, and then we can take a trade. So showing you how you kind of keep track of those with a variable. Let me come back here. We have these variables at the top to keep track of those, and then we reset them when we have some sort of condition, when we say, oh, it didn't happen, so we reset things and start looking for the beginning condition again, right? So we had all of those sorts of things. And then we had something that, you know, has the appearance of some profits, although it was trading the opposite of the original strategy that we were going for. It appeared profitable. But then when you start to really go into the results and you really understand the results that you're getting, you see that, nope, it's still just, there's not really alpha. There's not really alpha there. So then that kind of tells you the sorts of things like, okay, what do I need to look at when I'm looking at the results? Let's not just look at total net profit is positive. There's more to it than that. And you know, how I can kind of shift things around and use the tools that we have here to do a bunch of different tests and then compare it to other strategies, right? So that was a pretty good example of programming for today, I think. Now, do we have anything else? Well, let's close that first. And I guess we don't really need this anymore either. We have moved a little step lower, and the point of control has moved down to 0.06. It looks like that the knob spread in particular has recovered, but not the 2 and 10. Gold did move higher, but it hasn't really done much since then. Copper started to win out there. So that's really interesting. What about the Japanese yen? Japanese yen pushing a little bit lower. So that might be part of why the treasuries were able to go lower. And the S&P 500, has just been kind of stuck in retracement of the big down move. Well, so here again is another one of those things that's like, okay, the market is not perfectly informationally efficient. So when it comes to bonds, we can kind of come in and look at, like, based on what inflation is and all of these other things, you can get a pretty good model of like what interest rates should be at. I don't know what those are, but like there are analysts that do that sort of a thing. It could absolutely be the case that based on that news that actually we should be at like 4.8 or something like that. And then you would ask, well, why isn't the market trading it? Well, because you get stuck in the liquidity hole, and that kind of like dampens things. So I guess what I'm saying is that it's entirely possible to see a follow-up move tomorrow. And, you know, we have PPI as well. So that, a little bit concerned about the consequences of this for the longer term chart, because where's my long-term chart? Like that's pretty ugly. This just reminds me a lot of like this candle right here, right? I think that was the Fed meeting in December, wasn't it? Yeah, I think that was the December Fed meeting. And look, you know, after that. So I'm a little bit concerned that it could do that. Because we need interest rates. Like, I need interest rates to come down. I would prefer interest rates come down, please. Thank you. Donnie, you need to do more. You need to do more to hammer the economy so that you know, we have reasons to reduce rates. I think is where we're stuck at. What should we say on the CPI here? CPI. Sharks markets. It's a pretty good stream today, guys. I will see you. I think I'm going to go skiing today because it's a weekend. It's a holiday weekend, so I got blackout dates. So I should go skiing in the week, right? So I'm going to go skiing today. I'll see you guys tomorrow. Stay